Hi, I'm Dan Pillen. We're here talking about your taxpayers' rights, and we're talking about how to avoid problems with the IRS. The April 15th filing deadline is coming up soon. I want to talk about some of the most common mistakes that people make on their tax returns. If you pay attention to these few tips that I have here, you can avoid a lot of problems with the IRS. Number one, the IRS tells us that one of the biggest problems, biggest mistakes that people make on their tax returns is they select the wrong filing status. There's 5 different filing statuses under our tax system. Married filing separately, married filing jointly, a single person, a head of household, and a qualifying widow. And so you have to select the proper filing status based on your facts and circumstances, and you need to understand what the rules are to do that. I recommend that you get a hold of IRS Publication 17. That's Publication 17. You can get that right off the IRS's website. It's got a section in there on the filing status rules, and it tells you, if you're based on what your facts and circumstances are, which filing status you are going to qualify for. The next common mistakes that people make on their tax returns is they either provide an incorrect or a missing Social Security number. If you got an incorrect or a missing Social Security number, the IRS can't process the tax return. That's going to delay your refund, or it could cause other problems down the road, such as, for example, an accusation by the IRS that you didn't file your tax return. So make sure that your Social Security numbers are correct, especially for dependents. This is something that the IRS pays very careful attention to make sure that multiple people aren't claiming the same dependent. Only one person can claim a dependent on the tax return, and it's only the person that qualifies. And so make sure your Social Security numbers are correct. The next thing is claiming ineligible dependents. Claiming dependents on your tax return that you're not legally eligible to claim. This is a very common problem as well. Generally speaking, there's a number of rules depending on the situation, but generally speaking, you have to be providing more than 51% of that person's support during the course of the year for the question of eligibility to even be broached. So in other words, that's the threshold. You got to cross that threshold, and then there's other issues. So again, you're going to look at Publication 17 for the details on that. The next problem is forgetting to sign or date the tax return. If the tax return is not signed, it's not a tax return within the meaning of the law. It's got to be signed under penalty of perjury. So make sure your return is signed and dated. The next common problem, and in fact this might be one of the biggest problems that leads to audits with the Internal Revenue Service, and that is claiming an invalid earned income tax credit, or an earned income tax credit that's not properly supported by the information in the tax return. So again, double check the rules on the earned income tax credit. You'll find these in Publication 17 as well. The earned income tax credit is a very convoluted, very confusing credit calculation. So if you got any questions about that, contact a tax professional to help you through that situation. You don't want to claim an invalid earned income tax credit on your tax return. And one of the biggest problems, one of the most costly problems, is failing to file the tax return. A lot of people will not file their tax returns this filing season because they don't have the money to pay. That's a mistake, friends. You're going to add insult to injury in a big way if you do not file your tax return on time, even if you can't pay the tax. If you can't pay the tax, there's a couple of alternatives to use. The first alternative is IRS Form 1127-1127. Is called an application for an extension of time to pay the taxes. If you file that form on or before April 15th, you can get up to 6 additional months to pay the taxes without penalties. And so that's important. You'll still owe the interest, but you won't owe the penalties if the IRS approves it. If 6 months is not going to be enough time for you, or if for whatever reason the IRS does not approve the Form 1127, you can use Form 9465. Form 9465 is called an installment agreement request, and that'll set the wheels in motion to get you set up on an installment payment with the IRS that you can pay over time. In both situations, friends, you'll avoid the penalty for failure to file the tax return, which is up to 25% of the tax liability. So that's a serious problem. To address my book, How to Win Your Tax Audit, my latest book, deals with all these kinds of problems, audit problems, how to avoid audits, how to deal with the Internal Revenue Service in any audit situation. If you file tax returns in the United States, you need to get this book, How to Win Your Tax Audit. You can get it right off my website, which is taxhelponline.com. That's all one word, taxhelponline.com. Thanks for listening.